You're listening to financialradio.co.uk. My name's Giles McMullen, chatting to Bill Rook from Redmayne Bentley. Hi, Bill.
Hi.
So it's the first one back from the Christmas break.
Yep.
And presumably you've been looking at charts over that period and coming up with the ideas.
We are looking at a new indicator, Giles, I want to introduce to you today. Is the vortex indicator.
Right.
I think it's a variation on directional movement, but it does include the inside day as part of the calculation. So I think it's quite interesting. I'm going to use this on a weekly thing. I think there aren't many of these versions around, the weekly basis one, and I think it's very good for early trend decisions and latterly when things start turning wrong. So, or down, I should say. Nothing's wrong. It's just a case if it goes down, you take the appropriate action. So that's the way it is. So that I want to introduce today, really.
All right. Well, we'll have a look at that as we go through the charts. Let's have a look at the first one then. AFR.
Well, this is Afrin. This is one of my naps of the year. I've produced a few naps today, and Afrin is big. We've looked at it before. I think it's in Nigeria, and there's an e-book site it's developing, and this is going extraordinarily well. Valuations suggest this might go up to 130 pence a share. It's currently about 103, and now the chart I'm looking at here, it's got buys on the bottom there, that's where the relative strength is extremely low. That's reversal buying, and the cow on the
yeah, that's new. That's new, Bill. I haven't seen that before.
It is for this template, but just to show you, just as a refresher to say, well, do I buy breakouts where the bull is, if you like, or do I buy on the dips? And I think this being a large company, it's about 900 million. I would tend to buy on the dip. A lot of people would say I would like to buy in the breakout, given that the story is still the same. Using the 200-day, which is the green line, as an exit strategy.
Okay, so if you were buying this today,
well, I'd buy because there's a bull on it, and
yeah.
there's some good news flow out on it, and there's some good research data on it. This one, I reckon, is going to go to 120 short term, where it's the red line, which is running parallel to the 200-day moving average. It's called the 65% above the 200-day moving average line, which is a very, very interesting line because most shares, unless they're big shares, generally stall at that level, which is it just happens to be. Yeah, they might go on higher afterwards, but they'll stall there and then go sideways and then go higher towards that line if it's going to go up later on. So 120 is that's the target. The vortex, the weekly vortex, which is similar to the directional movement, it just looks at volatility changes and the range changes in the market. And that changed early March last year, well below the 200-day moving average, where the share price was below that. So where the two shell shorts were on the left-hand side, that's possibly where you would actually think about, the share's coming into the radar soon. It's coming onto the radar. The value of that is that gets you in pretty early.
Right.
Yes, it might be pretty volatile. The relative strength, as you can see from the top of the chart, isn't that strong. It gets strong latterly. When that becomes strong, you know it's in the top 10% quartile. When it gets very high on there, that suggests that it's looking very, very good. The earlier chance to go in is when those the vortex lines cross blue and red. And the second indicator from the top is just trend confirmation, which started around the time the blue vortex line was going positive.
Right. Okay.
Yeah. So this one is really looking interesting.
Fantastic. And that's Afron.
Afron. Yeah. Big company. Yeah.
All right, Bill. Thank you very much for that.
Yeah.
The next one we're going to have a look at is AQP, which is Aquarius Platinum.
That's right.
You've liked this for a while. Do you still like it?
Yeah. Well, I'll tell you how we use the vortex on this one, and yes, I do like it. But I think it's had a good run. We bought it in December when there's green arrow is there, 260 around the 340 level. It's up to 450 now, and also at the 260 level in October, one of the key buying days. In fact, that was one of the key buying days, and that one about 260 in October. Those are the buying on the dips days. As I say, when you see a bull there, you buy on the breakouts. Now, how you would use this on the 18th of November, the three on the left-hand side of the chart there, you'll be looking at, beg your pardon, Giles, you look on the 18th of November 09, you'll be looking to go into that one on the right hand side, because the vortex is broken in September faffed around a bit, and then you go on the next breakout point. So you take the third bull as a breakout point, because then you've got confirmation that it's going to a high, and you have momentum on your side, and volatility is moving quite nicely. It's not that too high yet; it's moving quite nicely on the upside. So that's when you go in on that one. On the left-hand side, you would wait, even though the signal was very early in February. There, you wouldn't go in until the other bull comes in, because that is a new high after the crossover of the vortex. Now, the one on the left-hand side is more problematical because the relative strength isn't that good, so you've had to be choppier in and choppier out, because you haven't got any guidance as to how strong the share is going to be against the market. In the sense, you don't know how it's not performing that well necessarily. It isn't performing that well. It's a case of you grab a profit where you can see it on the left-hand side. On the right-hand side, however, when you go in there, you can run it a bit. And we've been taking profits. I think we've taken 20% in that in a month or so. So that's been quite a good trade for us. Other people were looking for where that red line, the 65% line, trails and moves above the 200-day. That's about £5. So longer-term, medium-term clients looking for a fiver. Short-term clients can take a bank of profit, wait for it to consolidate, and wait for an oversold position.
Okay, Bill. Yep, that looks a nice one, and
it does, doesn't it?
It does. Yeah, and it's a nice story as well. Platinum, I think.
Well, Platinum is looking very good. I mean, the World Recovery on Cars is coming good.
Exactly.
It does, even though it's sponsored by government sort of. It's all good. Yeah, car story looks on recovery. Yeah.
We're going to. We've got to look at the FTSE 100. We're going to come. Let's do that at the end.
Yeah.
But we're moving on to the next one now, which is that Chariot Gold Holdings.
Chariot Gold. Yeah. This is an interesting one again. This chart here, look, you can see on the right hand side that it gone. You can see the relative strength very high. That kicked in around 25.
Now, is the scale? Is it pounds or pence?
Pence.
So this is a tiddler.
Oh, penny. Oh, yeah, they get smaller.
Right. Okay.
This is the buy points on there. You can see again on the with the relative strength in there. They'll all be always on here. And the bull points where the 60-day high kicks in. Again, you could see that first off the vortex is positive, and it kicked in very early on in February last year. And has been ever since. It's been pretty good. Relative strength has been good since about November this year. I always say, I think if you're trading breakouts of things, you want a high relative strength. That's my experience of that, and I think it's very, very important if you're buying to the best you can there, because you know that basically there's some flight to be followed through and further interest. That's what it's saying. So I think 25, 26 pence on this one is still running now. Again, this one is looking likely to go to about 32 pence. It might not be too far. Sorry, beg your pardon, it must be higher than that. It must be about 44 pence, I think, this one, the target on that one. 44 pence is the target on this one. Short term, that's for the 65% above the 200 days. Now, the interesting thing with smaller shares is they don't necessarily obey the rules. They might bounce off this line. It's the first key line of resistance, if you like, on the upside, and you might find that the share will go substantially higher if things go according to plan.
Right.
I should say at the bottom there, I've got green lines at the bottom there. The big green bar, green bar is where the long-term MACD goes positive,
right,
and the coloured bars above that are volume. So the green bars are long-term volume. The little red bits above that are where we've got power volume. I call power extra high volume going in on the short term, and that really is applicable when you have the latter part on the chart. I think you can get volume sporadically split at any one time. It doesn't mean anything. It only means something when you've got the trend in place. So
okay.
This is a runner in a former Soviet state. Looking good.
Okay, Bill.
Yep.
Thank you very much for that. And resource stocks are sort of they could be a sort of a continuing trend.
Without a doubt. I mean, we've got gold running, and I think gold story in my view hasn't even started yet in terms of where we're going with it. It's central bank wise, and I think a lot of people are still bearish on it, which makes it good. I think gold is certainly going to go to 1,500, if not higher, in the short term. Maybe 2,000. We'll see on this, but. As QE continues, quantitative easing continues, uncertainty over what currencies, uncertainty over government lending, sovereign wealth, and all sorts of uncertainties around. Gold is number one, especially with the number of dollars around. That's the big